Welcome to Taking Stock. It's Thursday, the 19th of October, 2023. The year is zooming by, and you can probably tell from John's tan, he's back from Wales. You're right, John.
Yeah, how's about how you doing? Long drive.
Yeah, well, I was going to say, you've gone from in fact, your brother pointed out, the widest part of Britain, the UK. I've done that journey quite a few times because some of the beaches in Wales, West Wales, are really nice.
Oh, it's amazing.
From the east to the west. How long was that drive?
6 and a bit hours.
Was that in an EV car?
It wasn't. But I managed to get 450 miles range out of my very fuel efficient petrol car.
Oh, okay, that's so good. Yeah, well, I did say actually with Paul Hill chatting to him yesterday, and people have this range anxiety about EVs. There's a stat out there saying that 75% of the journeys we take are less than 5 miles. So I think,
true.
If anything, get a small little EV for pottering around to go to the shops and stuff. And if you need to do longer journeys, just then take a petrol or diesel car, whatever you need to do. Anyway, let me just share this with you, John. I'm going to share this. I'm going to my rather than just put it back on the blog. I'm going to share the screen here. This is the AIM All share. That's my Twitter feed there. I said, how long will the AIM All share index keep dropping? Out of the last 20 sessions, it's been down for 16, which is 80%. The index is now 47.89% down, 772 days. But it was at, in 20 years ago, it was at 785 points. It's now at 685 points. It's 100 points lower than it was 20 years ago. And in fact, these are some of the, they were the biggest, look at that, the biggest. Look at now, the change in the share price from 5 years ago, this was. Boohoo, Asos are up the top there, 86, 93% are down. There's only one riser, Gamma Communications. But I suppose, in fact, someone did point out saying that's handy, that chart, because you can see which businesses have changed and which haven't, which have just, drifted down with the market sentiment and will return to previous highs or former glories. So maybe it's worth looking at. But
how many of the largest companies moved up to the main market? That would be my question.
Yeah.
So is that companies that are still on AIM, or is that companies that have moved up as well?
No, their companies, I think it's still on AIM, yeah.
Still on AIM, yeah. So I mean, you would expect the AIM index to suffer, as its companies mature and decide that a main listing is what they want, which is why it's not really a trackable index. Is that sort of stepping stone?
Yeah,
well, that's the theory.
Stock pickers market, isn't it? You've got to pick the winners. If you pick the losers, you're in big trouble because they can go, more than 99% down, and they can go bust essentially because they're a startup company. By the way, and I did say there, just on comments wise, a couple of favors as always. But feel free to comment if you happen to comment. By all means, like it and download the Vox Markets app. It is, I think, the best delivery system out there for RNSs. And normally, you have to go chase RNSs down like in your email inbox or to the website. With Vox Markets app, it gives them to you wherever you are, walking the dog, in the supermarket. Just follow the companies you want. It's free to download, free to use, and once you start using it, you'll never look back. Honestly, and a couple of times, I've been sort of walking the dog, and wow! And if I hadn't looked at, if I hadn't got that, I wouldn't have seen the RNS. But there's a market today. So wait, look at that! For once,
bit green.
The AIM All share. It's been up a while. The only times it's been up, I don't know if it lasts a day.
It might not last 5 minutes. Look at
that.
0.09% up.
yeah, exactly. In the risers, you've got Admiral, Spirit, Sarco, London Exchange.
Yeah, it's interesting. Yeah, we've got a couple of big engineers there, Spirex and Halma. I'm not really sure what data is supporting them.
Look at Rentokil. In fact,
not a lot.
I think AI commented on that. It says a comment, Rentokil's down 15%. That's a lot for a big company.
It really is. It's
Rightmove, huge. No news out.
Well, there is news. There is news, but it's read across from the sector OnTheMarket.
Oh, okay, yeah.
So OnTheMarket is being bought by an American company.
Yeah.
And Rightmove is the undisputed heavyweight champion of its sector. Obviously has the biggest position with the UK's estate agency group. It's been around for longer. But, you've now got a couple of really serious competitors out there, Zoopla being one of them, of course, which is owned by private equity now, was it previously? No, it's part of another UK company, and OnTheMarket. And OnTheMarket has been, is basically being taken over by an American company called CoStar.
Yeah.
So just shy of 100 million quid. And that's probably a worry if you're a Rightmove shareholder, because it suggests that OnTheMarket has very much got its eye on the UK. CoStar has got its eye on the UK market.
Yeah. And do you know what? There's some awful news actually. I mean, if you, I'll bring it down. Let's go to the bottom straight away. Look at that. The US mortgages rates have hit a 2-decade high of 8%. These are 20 years. And this is even more worrying. Look at this. When you see figures like this, US mortgage applications flow plunges to the lowest since 1995. That's phenomenal.
It is. Well, if you remember, we did one of these shows where we talked about, is there further to fall on house prices? And we got huge numbers of views from the US. I think there are serious worries there about the property market, as there are here, perhaps to a lesser extent. But
I think the problem in America is they don't have, apparently, they don't have some short-term fixed, do they? They have more longer term.
Very long.
And so people now are worrying about coming off those long-term fixed. It's going up to 8%. They've gone from wherever they are. And if you look at that, if the mortgage applications are down, you can see why people are starting to worry now about the recession in the US, because I said the housing building market and all of that is a huge stimulus for the rest of the economy. It flows into so many other different trades, doesn't it? I mean, like the building merchants, all that, everyone you're hiring, plumbers, DIY, all that kind of stuff. So when you put a chokehold on house building and people not buying new houses, then the entire economy sort of slows down, which is what it's important. What's the Fed want to do, really, isn't it? Let's be honest.
But I guess the sort of memories of the housing collapse in 2008 are fairly fresh in a lot of people's minds as well. A lot of trouble can come from the property market, as you say. I mean, on the market's numbers were actually pretty good, but this sort of goes to show that picks and shovels rather than houses themselves are probably where you want to be at the moment.
Yeah, absolutely. So AI investor Rentokil hammered this morning after an underwhelming trading update. I'm glad my stop loss kicked in and got me out without being too battered. Nearly got caught in the trap there, the mouse trap. But nice. Let's have a look at Rentokil. So rent or kill. Where is that? There we go.
I mean,
look at that chart there on the. Look at that.
Wow.
And that was wasn't a bit of a downtrend. You can see that it's rolling over anyway. You can see straight away there, higher high, lower high, and then so that was coming in a downtrend anyway. But if you look at it, I mean, they do manage to cover it up quite well, don't they? These because it's only in the outlook. I was looking at the fallers here,
yeah, exactly.
And you scroll down, Rentokil is the third biggest faller, and that's including all the tiddlers out there, and it's a £12 billion company. And Q3 trading update. And if you scroll, it's all okay until you scroll on the outlook, and it says in North America, we remain mindful of the macroeconomic backdrop. Near-term market uncertainty means the region's full-year performance is anticipated marginally below previous expectations. So, in fact, of that,
you'd have thought they'd be doing brilliantly. There's apparently a global outbreak of bed bugs. Yeah, it's causing all sorts of problems.
Is that in France? Isn't it?
In France, actually,
Yes.
I'm worried that it's going to come over here. They have had that in America before. New York had a big problem with it many years ago. But I mean, this is extraordinary. I mean, it's a downgrade, but it's not. It doesn't look.
Yes, that's the thing.
To warrant a fall of that magnitude.
Well, when you get that on a big cap stock falling 15% like that, you imagine. I mean, you put out a profits warning, and you're a small cap. It does do 30 to 50%. That's what it's like with small caps. They rise faster, they fall faster.
I mean, look, they're talking about group revenues, group outcome in line with expectations. So, everything is getting savage. This is why I've said before, I really don't think, the effects of what's happening in the economy have yet filtered through into a lot of earnings forecasts, which is why I do think, although as we've spoken about, the market and the economy are different things, I think there is still stuff to filter through from this period of rising inflation and interest rates that isn't showing up in earnings yet, and is going to catch people by surprise.
Yeah. Rifzov says AIM will never go up. I hold AIM stocks because they're cheap, and Miss Whiplash isn't. The index may struggle. Gregory says I wouldn't feel safe driving my kids around in an EV. They catch fire. And doing seatbelts, getting kids out of the back seats, not for me. Do they really? How many instances have you seen where a car catches fire though, and someone's been caught inside?
I do worry. I mean, I do.
It doesn't happen. How often does that happen? Doesn't happen, does it?
I saw some stats the other day which just suggests it happens, on fewer occasions than it does with diesel cars.
Yeah, there we are.
So I do think, I mean, this goes back to a much bigger problem I think we have, and it's not about whether EVs are better than diesels when it comes to safety, but actually the amount of dubious information that floats around the internet and is magnified by social media. It's almost becoming impossible to work out what's true and what's not.
This is a good little site. Have you seen it? I posted this yesterday. It shows you basically what we're looking at. This is now the national grid. This is what we're using. 50% pretty much renewables. 28. I didn't realize how much it changed so much. And
changes every day. Every day.
Past week, you can see that if you go all time, you can see fossil fuels, massive, small green renewables. Past year, look at that getting bigger. Past week, even bigger. Even the wind is blowing heavily. So wind is doing very well. Look at that. It's doing 39% of our energy. That's phenomenal, isn't it?
Yeah.
Really?
Yeah. I mean, it is phenomenal. It is absolutely phenomenal.
When you go back to 10 years, for example, how would it be a tiny percentage of that? Okay.
But again, all the information out there that's telling us that how terrible wind power is, and the intermittency means that it can never supply the nation's needs, that it requires heavy subsidies. We've just seen there's a proposal gone in for a subsidy-free wind farm in Holland recently. It's, as I say, there just seems to be so many vested interest groups, putting stuff out there, and it's just becoming impossible to filter what's true and what's not. It's becoming very irritating. I'm going off on a massive tangent that there has got to be some responsibility for social media platforms to really kind of stop this.
So look, Dagger 888. All decent firms move up from AIM. With poor liquidity, there'll be less startups on AIM driving the index down. No, I think it's a good thing that some of these crap companies get taken out. And this is a natural cleansing cycle. When you see the capital markets freezing up, the companies that are not good businesses, I always believe good businesses will find a way to get access to funding because they're good, and good investors can see that. And they'll be paid to invest money because they get a return.
The thing is, Justin, that funding might come from other sources, private sources.
Yeah, it may do. Yeah.
There is this big concern about this de-equitization trend.
Yeah.
And private money is a big part of that. And companies, as they listing is expensive, and I think a lot of companies are struggling to justify that expense, and especially when you consider all the sort of regulatory requirements that listed companies have. So again, there are clear indications that markets are broken. Informa,
well, I think they're broken. They're temporarily frozen. That's
broken.
The thing is, it's because of interest rates completely. That's what it is. But they'll come down next year, and all of a sudden, people won't be getting a good return on. Why would people want to gamble, but invest in the stock market, looking for a couple of percentage returns? They can just chuck it in a safe government bond or in a savings account for a year for 5%.
Well, yeah, I mean, you look at Hargreaves numbers today. Hargreaves Lansdown had a trading update today.
Okay, let's go.
A lot of customers seeking the sanctity, the sanctity of cash.
Yeah. Oh, so trading statement.
Not a bad statement. The shares were down. Actually, sort of minor increase in assets under management in net inflows. But yeah, huge cash balances. And as they say, look, you've got active savings performing well.
Yeah.
Customers favouring cash savings over risk-based investments. That seems, safety first it seems to be the way that a lot of people are investing or saving at the moment.
Well, so the reason why they're down here is that because the net client growth of 8,000 a quarter, and Q1 it was 17,000, primarily driven by net new clients. Okay, so is that what? So because if you look at AJ Bell, for example, they've gone up today, and their figures.
Oh, their numbers are much. Their numbers are much stronger. I mean, their growth is much quicker.
Customer numbers increased by 50,000 to close to 476, up 12%. To me, that's they're both. If you look at the charts, they're both record assets under administration of 70 billion. How much has Hargreaves Lansdown got?
Hargreaves, it's significant.
They got 70.9 billion. But let's look at the chart. They're like for like charts wise. But it seems to me like, look at Hargreaves Lansdown. It's just literally downtrend even further now. That's why I said, careful of the range. Informa, having a go at me there, saying, "I'm glad you're back, John. All Justin used to talk about is charts and where he got out at the top on every stock." No, I didn't. But that's an example. We look at the trading range there. I did say, you can trade a range, but be careful because it could break down from the range. You're better off trading uptrend. And look at what's happened there. You've seen that range there almost breaking down. It's kind of here. AJB, Bell. Let's look at that. Is that performing any bit? Again, that similar chart. I mean, it's rolled over. It only IPO'd back in 2019, 2018. But it's, look at that. Historic lows. Both of them are. There's so many opportunities in the market. There's so many companies that are decent businesses that are literally at lows. It's ridiculous. It is ridiculous. Conserve your cash, guys, ladies and gentlemen, because I think it's a bountiful opportunity coming in 2024. Really is. Don't be tempted to jump in here now until the interest rates come down. There's no point doing it because you say people are parking their cash elsewhere. Once that erodes and there's no savings to be had in banks and whatever money market funds, it'll go to the market. Simple as that. Money inflow, and that's what charts are: money inflow, money outflow. Simple as that.
It will happen. It will happen. It's just how long does this painful period last?
Yeah.
It's been as on the market shows. There are great companies out there being snapped up on the cheap. We saw it. Yeah. We've seen it regularly this year. Regularly.
Let's look at the front page of Fox here. OBA. Ondine Biomedical. Look at that yesterday. They've got this sort of this light they can put in your body, light waves that can kill antimicrobial disease. And this made me laugh because I remember Trump at a COVID press conference once talking about, can we get some light into the body? Can we just, get some light? And everyone sort of laughed him. Then he talked about bleach. But this company does it. You should look in the technique. They're very early stage. They're not even in clinical trials yet. They're in sort of in vitros. But it's very interesting technology. AssetCo is one of the most fun. I mean, Paul talked about those. It's a good fund and literally some sort of star fund manager in charge of that. But it is, again, seemingly very undervalued compared to what they have. And I said, Paul, when the market turns, companies like that will do very well. Same with Hargreaves and all those kind of companies. They'll just do well. It's the market sentiment, isn't it?
It is. Okay. It is. So, I mean, so we had some other fund managers reporting today. Fund manager goes Rathbone Brothers.
Okay. Not the Rathbone Brothers.
Rathbone Brothers.
All right, son.
T-shirts
the Rathbone Brothers.
But it's a really nice company, really good sort of wealth investment manager. Again, it's sort of seeing a steady trickle of inflows. Not certainly no disaster. But then look at that chart. This whole sector is just so out of favour.
Rat. That should be Rentokil. That should be Rentokil's ticker, shouldn't it? Rat.
It should, shouldn't it? It should.
Why did they go for rat?
Because Rathbone Brothers probably already had it.
I know, but I remember. Why didn't Rathbones go for Rath? It's a bit more market than Rat, isn't it? I suppose people remember Rat. But yeah, again, decent companies rolling over. Coming down, almost hitting new lows again. But anyway, let's look at most read vast resources in Tajikistan update. And Victor's written a piece about this there. Advances. First lead zinc shipment and MOU for April gold mines.
Anyway, but Trafigura. Is it down today?
It's down on that news. Yeah, down by. I thought we'd be up on that.
Well, yeah, you were, but I mean, there's the second part of it is quite interesting. They're doing they're working with some kind of memorandum of understanding on a takeover through one of their strategic partners, and they seem to be providing sort of some form of services to that. It's you're going to spend about 10 minutes, to work out what it means.
I was a little confused. I read it twice actually, and that's why I handed it over to you here. So what's going on here?
It's somewhat confusing. It's somewhat confusing. So, I mean, I think it's largely good news. It gives a little bit of potential upside from the work that they're doing for their partner Bay. So yeah, I mean, I don't know why the shares are down on that news.
Exactly, it's largely good news. Why the share price come down? One of the biggest risers there is McBride.
Yeah.
So McBride, explain what they do again. Obviously,
own label, private label household products, cleaning.
And they've had a trading update. Yeah.
Decent. I mean, they could smash their operating profit forecast. 8 million ahead of internal forecasts the first 3 months of the year.
Why is that then?
I guess there's several things at play. One, volumes of private label are going up. They're cheaper than branded alternatives. So they're picking up share as consumers abandon their favourite brands. And they've had a bit of a tailwind, I guess, recently from some retreating energy prices.
Yeah. Okay.
But they are conscious, as they say in the statement, that may not last. I think I've mentioned to you before that this has always been sort of inversely correlated with the oil price.
Yeah. Okay.
But yeah, it's I'm reading across, to one of my holdings, Unilever, thinking, don't like the look of this so much. If the cost of living squeeze is really that hard that we're seeing such huge growth in private label, then I suspect you'll see it showing itself up in falling volumes at branded own brand, yeah.
So they supply
supermarkets or Superdrug or whatever it might be.
I think the trend is definitely going that way for the majority of people. I said years ago, people were ashamed to put own brand stuff, on the till on the conveyor belt. But these days, you're stupid if you don't, because there are certain, like I said, branded products that you can't do without. Like I said a while back,
Marmite, for example.
Yeah. Well, do you know what? No, I've had Aldi stuff for that. And that's fine, I think.
Really?
I mean, I bought. In fact, the other day, I thought I was being quite frugal. I bought Asda digestive, McVitie digestives, rich tea biscuits. No, digestives, and brought them back. And my wife said to me, I didn't. About half an hour later, she said, Justin, we got a good relationship and we can talk about anything. I said, oh, what's going on here? I don't like those cheap biscuits. and she does buy sort of own brand. There's certain things you can't replace. Like McVitie's, for example, you can't replace that. And tea bags, to a certain extent, tea bags sometimes it's like a bag of sawdust from own brand. Sometimes they're a waste of time.
Yeah. But, I mean, McBride, I spoke to them once. They said to me that the trend was first of all towards things like cleaning products. You don't care what you spray on a countertop. But people were more reluctant to use, say, private label own brand deodorants, for example. People are more fussy about what they put on their body than what they put on down their kitchen sink. And that's understandable. But the trend is changing. I think you're right. And I went into Superdrug the other day to pick up some personal hygiene products, and the prices were mind blowing, eye-wateringly expensive. So enough to kind of destroy demand destruction of branded products because the price increase is just so high.
John, people are missing you here. Nice to see John back from his Kashmir convention in Clwyd. Emmy says, really good to have the bear back today. The ramper guy needs a partner, the bear. Well, I'm not a ramper guy. What am I ramping?
I'm not really a bear either. I'm just, take a pragmatic view.
Yeah. Gregory said, it's a bear. Gregory said, I'm not proud. I shop at Aldi. I bring my own M&S bags, though. Just bring M&S bags. That's it. Okay.
I take my Aldi bags to Waitrose.
Yeah. That's flipping it for you. All right. What else is there? By the way, scroll down. So Tirupati, it's obviously, I haven't really read it in depth, but I don't think it's very good because it's down 16%. And so,
it's sort of cranking up shipments. It seems.
Why are they down?
I again was struggling to work. I think there's been some softness in the graphite price that they refer to. But yeah. Oh, there you go.
Oh, here we go. Being subdued, graphite market's been subdued in recent months, reflecting confidence in our business strategy. Okay.
They need to raise they need debt funding as well for
okay.
In the line above. See?
So look, TGR, Tirupati Graphite. That's definitely downtrend there. It's if you find a stock in an uptrend, it's hey, go for it. Atlantic Lithium statement: media speculation. Oh, I hate those media speculators. What are they speculating about now? They're saying in relation to the company's mining lease, which is of course the big deal. That's what everyone's waiting for the Awoya project in Ghana. The company confirms there's not yet been granted a mining license in respect to the project. There is no certainty as to when this may occur. The company will update the market with developments as and when is appropriate. This is why you need to get the Vox Markets app, because when that comes out, you can literally, as soon as it comes out, you could buy some shares, and 90% of the market wouldn't know it's out there. Yeah. But it's going to happen. That they've got the Ghanaian government pretty much investing 32 million into the project, because if they decided not to grant the mining license, it'd be financial suicide by the Ghanaian mining fund, wouldn't it? So
I'm not sure they've actually put that. I'm not sure they put that money in yet. I think they made.
Have they?
I'm not sure. I thought they'd made a commitment, but that it was still ongoing. The confirmation of that. But there have been other developments. We talked about the sort of
diverting power lines,
power diversion. They've got there is a very supportive government there.
United Mills Income agrees to invest 32.9 million in the Cape Coast. When's it happening? I don't know.
Yeah. There you go. Agreement is non-binding. So I mean, it's likely to happen.
I think it's a high probability, really.
High probability. Yeah, there's a high probability of everything happening here. But it's
everything.
I mean, the mining license and the investment, which are obviously related. And so this is a great project. I guess things take time. I mean, this isn't planning permission for a single-story rear extension. This is a huge project.
It's one of the biggest 10 lithium mines in the world. That's huge. When you realise we need a lot of lithium, and you go around the world, look at the mines, and realise this is one of the 10 biggest in the top 10. It is massive. Yeah.
Massive.
Update suspension. They've applied. So this is once the company's full report accounts have been uploaded to the website, Saietta will be traded back online. They'll be relisted there.
They have talked today about. They're going to be looking for strategic financing, strategic investment to really accelerate their strategy. And actually, obviously, the shift in the strategy has been to focus on specific markets and specific technologies, which mainly means that sort of 2-wheel, 4-wheel light vehicles in India and Asia Pacific. And pulling out, not necessarily pulling out, but there's sort of technology transfer deals with its marine and heavy truck businesses. So, they are on the cusp of something big, but just looks like they're going to need a bit of cash to make that happen.
Yeah. I don't know what this Bidstack came out with. They've that's been a car crash of a company. I mean, the things.
Fox Marble.
It's changed, hasn't it? So
Eco Buildings.
That's down. They've restoration. Their final results, I think, October the 18th was final results, and October the 19th was interim results. But where are they at with it? I look down here. What's going on here? Because they've really just changed the name. But revenue of 32 grand. What is going on here? Have they got any money? This is the end of June. When did they change? Because they got cash of 638 grand there. And I don't understand. Did they raise money or something? I don't know what the story is here. I saw some people promoting it, talking about it, ramping it, call it what you will on Twitter. Saying, "Oh, people don't understand this. It's going to go up." And then obviously it's been delisted and now it's restored. It's dropped.
I mean, modular housing, modular home construction. I need to have more of a look at it. It is an area. This should be an area that's really, really fast growing. Mm-hmm. We have a housing shortage in this country. In fact, we have housing shortages in many countries, and what you need to do is build houses as quickly as possible. We still put them up with bricks and actually there are other solutions. You can build houses with kits very, very quickly, very very sort of environmentally what's the word friendly, not necessarily friendly, but they're efficient. So a lot of passive houses built this way. Passive houses meaning that they're essentially self-sustaining in terms of heat and power. And so this should be a growth area. The big house builders have got small ventures in this area, but so I'm gonna have a look at this. I'm intrigued, but I'm not necessarily sure this is the one, but I suspect we'll see more of this in future.
Gear for Music, which is did you notice that G4M? Did you notice that Tune or Focusrite came out with some results yesterday?
I noticed them.
It didn't do well. I mean, it did say I think a bit of a weakening in the market there, but they sort of dropped down yesterday, and they're in a downtrend. Tune, worth keeping an eye on because they are good businesses. For G4M, what's happening there?
G4M, Gear for Music. Again, it's just very soft trade, particularly in Europe. The Gear for Music is where musicians go to get their kit, basically. I've shopped there quite a bit myself. It's a very, very good shop. And Focusrite is a slightly different business. Gear for Music is a retailer, as it will sell stuff from everyone, including Focusrite. Focusrite makes
So it makes upstream more. Yeah.
Yeah, it makes like sound cards and synthesizers and that sort of stuff. Yeah. But they're both in the same space. I'd rather own Focusrite because they're actually they have that intellectual property. Whereas Gear for Music is say they're not the only company out there doing this, although they are very good, and I have shopped with them quite a few times.
Yeah. So where are they at? They're at in restoration. As we're live, see, I just got a live notification that Saietta is now restored. Okay. There we are. Right that second. That's why you need to download the VoxMarket app because as soon as 12:30. Oh, it's 12:30. Here we are. So let's look at this share price is reacting here. We're even too early for the chart. 29th September. Where's it going to jump in here somewhere? But we're even too early for that. That's how good the RNS. If you want a better example of why you should get the VoxMarket app for free, notifications straight away telling you when things are happening.
Anyway, just quickly going back to Gear for Music. They basically it's been tough. Their shares are.
We can see that.
And are pretty much back there anywhere. Yeah. And you would have had, actually, so I know there was a huge trend, during lockdown.
Yes.
The people, buying this sort of stuff, it's like turntables and, learn the guitar, start making electronic music. So, gangbusters, but it's all slowed down.
I hated that in lockdown. All these imbeciles on Instagram or whatever, saying just showing off. I've learned the guitar from scratch in 6 weeks. Have you? Well, I've eaten about 20 packs of biscuits. So what?
So I mean, you could argue, the slowdown we're seeing now is partly because of, the fact that these are discretionary items and life's got a bit tougher, but also because a lot of demand was pulled forward from the future potentially.
So they've got net.
You don't need 10 guitars. Once you got one, you got one. Well, some people do have 10 guitars.
Yeah, exactly. And you only need to throw one out rather than 10 after the fad's passed. But total revenue, 62 million for the year, down 6%. Listen, they have got net debt reduced by 3.7 to 18 million there. So they lose money. What are they saying? Stronger than European revenues, UK, expectation of a normal H2 weighted trading seasonality, well prepared ahead of the peak seasonal trading period. Fully outlook remains in line. In line?
Yeah, it's okay. I mean,
here we go. Sorry, there's there. Sorry, market expectations for the year. 161, EBITDA of 9.8, profit before tax of 1.2.
Yeah, online retailer, fairly low margin. Doesn't have a huge defensive moat, which you could argue that Focusrite does. Had that demand pull forward from the future, so suffering a bit. As what we do want to see is a return to normal, and it's trimmed its cost base to accordingly, which you also want to see moving into the second-hand market as well, which is potentially very lucrative. Second-hand synths is worth a lot of money. Second-hand guitars can be worth a lot of money.
Yeah, there's a lot of second stuff. It's a company called Vint, isn't it, or something like that. Do vintage clothing, all that. They're the leader now. They're just really big into that kind of stuff. But recycling and all that's a big area.
Yeah, big.
But I mean, if there's ever a reason why you should just put a 200-day moving average on the chart, look at that. Okay, rally day, you could go in there and you held on. But look at the 200-day moving, nowhere near it. On the way up, look at that. It spent over April 20. That's the lockdown. Look, and then realised, in fact, people may be buying music interests. April 20, it didn't touch the 200-day moving average till October 21. They broke down below it, went down, up again. And now look, where are we now? You say, okay, so if you'd got in, say, even on here, you've been down, up, but it broke up nicely there. It'd been a lot more painful than getting it up here. So it's worth looking at that. Anything else or anything company news worth looking at?
I can't remember off the top of my head.
No,
on the stock exchange, there's some numbers out today, just sort of give you a high level picture of the markets, and as you'd expect.
Any good?
I mean, decent numbers. It's defensive. It makes really good money out of sort of data analytics, that sort of stuff. Markets are soft, and you saw that in the statement today. But there's enough within the group to really sort of keep it ticking along.
Yeah. We're in a range there, pretty much. Look at that. It's done very well. Look at. I mean, if you look at that, you can expect that. Look at this. That chart's phenomenal, brilliant. Look at that.
Yeah.
You see it broke down here. Then from what are we? 2009, pretty much £4 a share, and you guys hang on. Don't buy the stocks on the market. Buy the companies that are actually carry the data for the markets. That's where the gold is.
Yeah, my big worry about this company is that actually, that the restrictions they place on the use of market data is, quite significant, and it is. I would argue, certainly oligopolistic.
Yeah,
the financial data market, and it's extremely expensive, and it sort of keeps people out of the market, keeps people in the dark potentially. So I do worry about that, but that share price has been supported by takeover speculation for a long time.
Long exactly. Time. Yeah, I think they're advertising a lot on CNBC. I don't know why that is. I've seen okay. Emmy, Justin, are you still sure about the Santa Claus rally? Absolutely. I couldn't be more sure about anything. No, this is what I think, right? The fact we've had a sell-off, we're in the doldrums in September, October, sets us up because we're oversold. And so even if it's a bounce to normality, back to normal levels, or nowhere near normal levels, back to, say, level 6 months ago, there's a rally there. Or we continue to go down, and literally we get down at levels on AIM we've not seen since 2012, which is ridiculous. Or we could be not far from that anyway. Phil says, busy day at work, so I haven't looked properly H&L, trading update, or Phil holds some of these. Long term, I still like them. Yeah, revenue up. Still patiently build a position. I told you, wait till the trend goes up. It's in a range, it's broken down below that range. So you've got to be more patient, or you wait for the trend to go up. But if it's paying a dividend, I suppose, as long as it doesn't go down further than the dividend, you're okay.
Yeah, I do think that the sentiment towards it is overdone, overcooked.
Yeah,
and you can see that AJ Bell is picking up business from across the market, but then you've got the whole SJ St James's Place thing going on as well, and I know people who are switching from SJP into Hargreaves. So
yeah. So we looked at AJ Bell as well, Phil, who was a competitive thing. It's a bit smaller, of course, but their figures were better, and their chart they rose today. Whereas you can see Hargreaves, even on the bottom of the ranges there, it's now dropped out down to another range.
It's on track to do pre-tax profits of 414 million this year, PE of 11 times earnings.
Yeah, no. If you got patience, it's fine. All I keep saying, I mean, I'm not saying fundamentally. Obviously, look at companies, then just put notes on the chart and wait, because it's just an efficient allocation of capital. It could go down again further. You never know with these markets. It doesn't. Some of them no rhyme, no reason. Like I said, selling beget selling. You keep getting redemptions. All that will happen. It just will continue to spiral downwards. So
you're right.
Just
you're right.
Wait until the trend goes up and money inflow comes in.
I'm not a chart-driven trader, but I do make you right on this. I do. The more we talk, the more I'm coming around to the idea that actually they're very good at helping you time entry points and exit points.
Yeah. Okay. And what else was there? One other bit. Oh, by the way, look at this. This is a think tank. John says UK should consider the Bank of England raising targets to 3% inflation targets rather than 2% where they are. So it gives us more leeway if it's 3%, so they can raise it more. I think what that doesn't make any sense to me. It's just moving the goalposts, isn't it? Why don't you just put them up to 7% and then we're okay? We're under inflation targets. It's like, I don't understand the logic of that. If you've got a 3%, surely next time inflation goes up, they'll say, why don't we just put up to 3.5% or 4%? Just keep moving the goalposts around. Anyway,
I guess Resolution Foundation is an anti-poverty think tank mainly. So all they're doing is chucking ideas out there. Yeah, this crisis has been it's been disastrous the last
but wouldn't that hurt people
5 years more? But that's what they're exploring. I'd have to have a read, but presumably their thinking is this will make the pain that a large proportion of society have had to bear less intense.
I suppose because they're saying the Bank of England wouldn't have to raise interest rates so high, but inflation could then take off even further. I think they need to go back their tank and do a bit more thinking. All right. House price rises by the smallest amount since 2012. That's not a big deal. They're still rising. It's not like when a property, collapse, is it? They're still rising. They haven't really dropped. They've come off a frothy top. They haven't really dropped. And then there's all the stuff about thing. Nokia's. Have you noticed now there's a lot of job cutting from Rolls-Royce to Nokia, and you're starting to get this to stay in profit. And that happens at the bottom of the market. You get a lot of people losing jobs, and this is what's happening right now. And that's what the central banks won't admit that. But of course, the less people spending,
well, they will admit it. I mean, that they're keeping their eye on the jobs market. Presumably, that's the most important thing. I saw some data while I was
Yeah.
I was away. UK wage growth is, powering ahead.
Yeah, but it's a lag factor, isn't it? People get wage increases based on inflation, and so they're saying, if you go back like a month, inflation, or 2 months, inflation was like 8% or something. So they're saying we want wages at least close to 8%. So they get them at 7.8, but now inflation's at 6.5. So going forward, you have a hard job convincing your boss to give you, a wage increase of 10% when inflation is only 6.7. So that it steps in line with that, doesn't it? And so anyway,
this also, if you remember, we spoke about Spirent last week, and I can't remember the name of the other telecoms testing company that we'd have from. This is no surprise at all. Just talking about job cuts. I mean, that's what Gear for Music have done. Very large cost savings through redundancies.
Yeah, I just want to see what All is doing, because that's a little bit worrying. In fact, it did have a spike up there after Saudis and the Russian side, stopping the supply a little bit or cutting back the supply, but it's come back. Everyone thought this Middle East problem, if it gets out of control, that could really take it up. But it's not going crazy, but that's it. It does look too bad.
It seems that everyone is doing certain people are doing all they can to stop that situation worsening. Yeah. Because it has the potential to very much worsen. It's the most worrying thing I've seen for a long time.
Yeah, it is. I've had a couple of times. Yes, set targets alerts like Justin. Yes, thank you, Simon. I have 261 set. Hang on. Let's have a competition with Simon. This is how many I've got set. You beat me. I've got 164. Wow. No, 109. No, 164. I'll show you then. I'll show you my alerts. There, John. See at the
your
top
price
there.
Targets.
Yeah, no. So I set alerts on trend basically, because if I like a company, fundamentally I put it through the spreadsheet and everything that, and I look at the chart and it's in a downtrend. I think, okay, let's not jump in now. I'll put alerts on it and I'll forget about it. Do some research on something else, and then all of a sudden, it could take 3 to 6 months maybe, and then you realise your timing's a bit better. Then you think, okay, it's now starting to bottom out, come round. I'm going with the money inflow, not the money outflow. And so that's AJ Bell. Look, so there's an example of AJ Bell's 4 there, all-time low resistance, 50-day moving average crossing 200-day moving average. That's an example. So, and if you look at AJ Bell, I mean, that as yet is not convincing that it's stopped that sort of downtrend there. It may have bounced on that level, but just wait, bit of patience. I said before, the problem I've ever had with investing is I've had lack of patience. I've never thought to myself, oh, I've had too much patience there. That's never been the problem. It's always pretty much lack of patience, Anyway, anything else? Yeah, no, that's not a bad thing, is it? Yeah. What's your price target on Silver Bullet? £4. I'm not going to talk about Silver. I'll do anything on the weekend on my own channel, but I really like them, as you probably know. Anyway, thank you very much, everyone. Don't forget, like I said, this is it's all free, pretty much, this stuff. So to support us, download that app, because you will love it and you will thank us later that you download it. Think, is this free? Yes, it's free. It's the best app out there. And if you could share and subscribe, we'll be back tomorrow, last day of the week. God, it's been a short week for you, John, isn't it? Hey,
yeah, brilliant week. It didn't feel like a short week 6 hours into the trip back from Wales, but
no, exactly. Marvelous stuff. Thank you very much. See you on. Bye.
See you later.
Bye.